there is maybe some upside surprise to all this very negative thinking, sentiment on U.S. tariffs impact on China, global trade, and so on. The reason is because when you looked at the first tariff war that the first Trump administration raised against China in 2018 and 2019, that didn't really hurt China that much as intended. Chinese global export share has gone up since 2018, while America's global export share has gone down. So it seems that the tariff impact on containing China, hurting Chinese export isn't really working out. And the point here is that the Chinese have been quick in reacting to those threats and containing measures by innovating, by expanding in other markets, by restructuring and so on. And we've seen the impact. So that's why I think this time around, if Trump 2.0 tariff impact on China and on world trade is not going to be as bad as expected, there could be some upside surprise for the markets going forward, because this kind of more benign outcome is completely not priced in the market for the moment.
Okay, so the modelling of these tariffs over in Beijing perhaps seems to suggest that they are better prepared this time around. And as you say, they've diversified pretty successfully in places like here in Southeast Asia as well to try to circumvent that. But what about the currency? Chilo, how are you watching that? I mean, there seems to be inevitable depreciation pressure right now that the PBOC and the folks over in Beijing seem to be trying to defend.
Well, short term, there's no doubt that the Chinese currency against the dollar will fall in reaction to the tariffs measures by the U.S. We saw that last time in 2018, 2019, for 2 years, CNY USD actually dropped by about 14% for the 2 years as a way to counter the tariffs. Now, this time around, I think it's likely. Market is priced in. We are looking at short term, 7.6, even maybe a bit higher for the dollar against the CNY when the tariffs are implemented. But mind you, if the Chinese measure to reboot domestic sector works, and that will help economic recovery to revive, which in turn will help turn around investor sentiment on Chinese A shares and so on. Now, as and when that happens, portfolio inflows will return. Now, that will help the renminbi exchange rate from a financial account perspective, offsetting the negative impact of tariff on the exchange rate. Now, if the positive impact from portfolio inflows is bigger than the negative impact from tariffs, I won't be surprised to see the RMB exchange rate against the dollar going back down below 7 later this year or early next year.